Ever feel like the world's spinning faster and faster and you're just trying to keep up? Like key pieces of information are constantly slipping through your fingers?
Yeah, we get it. That's why you've given us this mountain of reports and data and news, right? So in this deep dive, we're going to break it all down. We're going to try to make sense of it all. What are the big economic, political, crypto, tech shifts as of, well, today, April 1st, 2025? It's like your cheat sheet to staying ahead of the curve. We're talking markets, geopolitics, the latest in tech, the ups and downs of the digital currency world, the whole nine yards.
And it's fascinating how these things are all intertwined. The sources you provided, they don't just show isolated events, they actually reveal a web of connections, factors influencing each other across different sectors. You got it. So where are we focusing today? Well, first, we're going to get a handle on the current economic indicators. All those whispers about a possible recession. Then we'll dig into President Trump's new tariffs. Liberation Day, he's calling it. Definitely raises some eyebrows. After that, we'll wade into the always interesting world of cryptocurrency. Finally, we'll touch on some big developments in tech, especially with AI. Ready to jump in?
Absolutely. And for you, dear listener, it's all about seeing how these different pieces fit together to create a complete picture of what's happening right now.
Okay, let's start with the economic landscape, shall we? Because honestly, the signals coming out of the US, well, they're a little shaky. Your sources point to a possible and pretty significant slowdown. Like the Atlanta Fed is predicting get this, a next 2.8% contraction in GDP for this first quarter of 2025. That's a number that definitely makes you sit up and take notice.
It does, doesn't it? And if we consider how the markets are reacting, that negative GDP forecast, it seems to be reflected in how the S&P 500 has been performing. Even with that small rise today, April 1st, the first quarter was the index's worst in 23 years, and it didn't do as well as global markets. This connection could mean that those participating in the market are already anticipating this economic slowdown, especially in sectors that are highly sensitive to GDP fluctuations. It also raises questions about how effective current monetary policy really is in addressing these concerns. Just so everyone's on the same page, the S&P 500, it's a major index that tracks the performance of 500 of the biggest publicly traded companies in the U.S. So it's a pretty broad indicator of how the market's doing overall.
Thanks for clarifying that about the S&P 500. Now, it's not just the historical days that's got people worried. Goldman Sachs, they've bumped up their 12-month recession forecast to, well, a rather concerning 35%. That's a big jump. And it suggests a growing unease among financial experts about where the economy's headed in the short term.
And that increased likelihood of a recession. It brings up an important point about risk. Your sources show that U.S. households are holding a record 29% of their financial assets in stocks right now. Now, a lot of people having investments in stocks can be a good sign. It can show optimism. But with these economic challenges looming, it also means there's a greater potential for loss if the market takes a big dip.
It's like walking a tightrope and the rope's getting a little wobbly. But hey, it's not all doom and gloom, right? Germany, for instance, their inflation rate dropped to a more manageable 2.3% in March. That's a pretty stark difference compared to the U.S.
Yeah, that difference really highlights something crucial. Economic conditions can be vastly different depending on where you are in the world. And speaking of different regions, that recent economic dialogue between South Korea, China, and Japan, the first one in 5 years, that's something to pay attention to. In a time when the global economy feels so uncertain, these kinds of high-level talks, they could be a step towards stabilizing things in that region.
Definitely something to keep an eye on. Okay, let's switch gears now to a policy with a, shall we say, bold name. President Trump's plan to slap tariffs on a whole bunch of countries starting tomorrow, April 2nd. He's calling it Liberation Day. All right, things are getting really interesting here. What's the motivation behind this? What's he hoping to achieve?
What's particularly striking is that this policy seems to be very much driven by protectionism. President Trump has said outright that he doesn't care if these tariffs cause prices for foreign car makers to go up. This really emphasizes what he's aiming for, to encourage more production here in the U.S., even if it means consumers might have to pay more for imported goods.
So the basic idea is to make imported goods more expensive to give American-made products an advantage. Sounds simple enough. But what are the potential ripple effects beyond just higher price tags on imports?
It boils down to finding a balance between the potential short-term benefits for some U.S. manufacturers and the wider economic consequences. And economists are divided on this. Some argue that these tariffs could give domestic industries a much-needed boost. But there are some serious risks to consider. Like, what if it leads to higher inflation as the cost of imports goes up? And what about the possibility of other countries hitting back with their own tariffs? That could actually hurt U.S. exports in the long run. It's a tricky situation with the potential to escalate quickly.
So Liberation Day for some might actually create headaches for others. All right, let's move from the potentially volatile world of trade to the often extremely volatile world of crypto. Bitcoin is currently sitting around $82,000, but it looks like it took a bit of a tumble over the weekend. So what's the overall vibe in the crypto markets right now? What do your sources say?
Those price swings you mentioned, yeah, they're pretty typical in the crypto market. And the numbers from the first quarter of this year, they show just how volatile things can be. Bitcoin dipped almost 12%, while Ethereum, well, took a much bigger hit, dropping over 45%. But even with that significant downturn earlier this year, the total market cap of the crypto space, it's still a whopping $2.7 trillion. Shows you the scale of this asset class, doesn't it?
Yeah, those are some pretty big drops for Ethereum. It's easy to get fixated on Bitcoin's price, but that broader market view, super important. Now, despite all this volatility, your sources keep pointing to a continued strong interest from big-time institutional investors. Seems a bit counterintuitive, doesn't it?
You're right. It's really interesting how what's happening with prices can be so different from how some of the major players feel. We see examples like Strategy B. Reports say they bought a huge amount of Bitcoin, over 22,000 coins. That's about $1.92 billion dollars at an average price of around $87,085 per BTC. That's a serious investment. It's just they're pretty optimistic about the long-term prospects, even with that recent price drop.
Wow, talk about putting your money where your mouth is. Investing almost $2 billion at that price definitely shows a lot of underlying confidence. And they weren't the only big players making moves, right?
Right. Metaplanet. They're reportedly planning to issue 2 billion Japanese yen in bonds specifically to buy more Bitcoin. That indicates that even corporate treasuries are interested in holding Bitcoin as an asset. And then you've got Dominari Holdings. They're putting $2 million into BlackRock's Bitcoin ETF, an exchange-traded fund. Those ETFs make it easier for traditional financial institutions and their clients to get exposure to Bitcoin without having to directly hold the asset. That's been a major factor in driving institutional interest. And let's not forget about FTX. They're starting to pay back $11.4 billion to their creditors in May 2025. Now, that's related to a past crisis, but it'll still pump a ton of capital back into the crypto ecosystem.
So even with prices bouncing around, some big players are still betting on the long-term potential. Now, when it comes to crypto going global, one stat really jumped out at me. Apparently, South Korea has more users on crypto exchanges, 16 million, than it has investors in the stock market, 14.1 million. That seems like a pretty big cultural shift in how people are choosing to invest, right?
It definitely is. That statistic really shows just how much cryptocurrencies have become mainstream in some parts of the world. It suggests you've got a whole demographic who are increasingly comfortable with and interested in digital assets as part of their investment portfolio.
And it's not just South Korea. Japan's making some big regulatory changes too. They're planning to classify crypto as a financial product by 2026. They're even going to introduce anti-insider trading rules. Sounds like they're trying to create more clarity and make it fit in better with traditional finance.
That's exactly the approach a lot of developed economies are taking. By bringing crypto under the same regulations as other financial products, governments are hoping to protect investors better, and maybe even make it easier for digital assets to become a more formal part of the existing financial system.
Here's a funny thing. Even in countries where crypto trading is completely banned, like China, there's still a huge demand for Bitcoin. It's like trying to hold back a tide.
It goes to show how hard it is to completely ban decentralized networks. There's just this persistent underlying interest in Bitcoin, even with all the regulatory roadblocks. And speaking of creative solutions, you know what France is thinking about doing. They're considering using excess energy for Bitcoin mining to help reduce the debt of EDF, their national energy provider. That's pretty innovative, right? Tackles two problems at once.
That is a fascinating example of like finding unexpected connections. And we can't forget about California. They're being pretty proactive here in the US with a bill, AB 1052, that's designed to protect Bitcoin rights. It seems like we're seeing a whole bunch of different approaches to regulating crypto around the world.
That's a great observation. We're seeing everything from complete bans to increasing clarity in regulations to actively protecting crypto rights. It reflects the global conversation that's happening and how our understanding of this technology is evolving.
Okay, let's shift gears again and look at the tech world. Things are moving super fast there too. OpenAI. They just got a whopping $40 billion in funding. That puts their valuation at $300 billion. That's insane. Shows a ton of investor confidence in the future of artificial intelligence.
It absolutely does. That level of investment shows how much potential investors believe AI has, and they see OpenAI as a leader in driving those innovations, that valuation. It's a powerful statement about how AI could completely change things.
And then there's that surprise acquisition of X, which used to be Twitter, by XAI in a stock swap. That could have some pretty major consequences for social media as we know it.
What's particularly noteworthy is that they might integrate advanced AI capabilities directly into X. Think about the possibilities. AI could be used for content creation, moderation, even creating more personalized user experiences. We might even see entirely new ways to interact online. This could fundamentally reshape how we connect and engage on social media.
It's mind-blowing to imagine what that could look like, AI becoming a much more integral part of our social media feeds and interactions. Now let's talk about the overlap between politics and crypto, because there are some interesting developments there. President Trump is scheduled to meet with El Salvador's president, Nayib Bukele, who, as we all know, has made Bitcoin a key part of his country's economic strategy.
Yeah, that meeting is a big deal because it brings together a prominent political figure with a head of state who has really gone all in on Bitcoin. They'll probably be talking about economic policies and El Salvador's experience with Bitcoin. And you know what? That could influence how other countries view and potentially embrace digital currencies.
And then you got Senator Cynthia Loomis. She's suggesting that the U.S. could build up a significant amount of Bitcoin without spending any taxpayer money. That's a pretty intriguing idea, isn't it?
It is. Senator Loomis probably sees the U.S. government getting Bitcoin through things like seizing crypto that was obtained illegally, or through other methods that don't involve directly spending taxpayer dollars. Having a large Bitcoin reserve could actually strengthen the U.S.'s position in the global digital asset landscape.
And the line between politics and crypto seems to be getting even blurrier, with Hut 8 teaming up with President Trump's children to launch a new Bitcoin mining company called American Bitcoin. Talk about a convergence of two worlds.
For sure. This shows how intertwined political interests and the cryptocurrency industry are becoming. It's a clear sign that Bitcoin is moving beyond being just a niche technology. It's becoming a bigger part of mainstream political and business agendas.
And we can't ignore the bigger financial warnings that are being sounded. Larry Fink, the CEO of BlackRock, he's saying that the U.S. dollar's dominance as the world's reserve currency could be in jeopardy. And the reason? Rising national debt and those big budget deficits, that ties back to what we were talking about earlier, those worrying economic indicators.
It does. What Fink is saying emphasizes the potential weaknesses that can come from a large national debt and imbalances in the budget. Those vulnerabilities. They could lead to people questioning the U.S. dollar's role as the top global reserve currency. And that could, in the long run, open the door for alternative financial systems or assets to become more important.
So taking all this information in, what are the big takeaways? It feels like we're at a turning point.
I agree. There are a few interconnected themes that stand out. We're facing a lot of economic uncertainty, particularly in the U.S., but at the same time, we're seeing resilience and continued investment in certain areas, like institutional crypto. And politically, there are big shifts in trade policies on the horizon. On top of that, technology, especially AI, is advancing rapidly, and that has the potential to change everything.
And it's important to remember that this is just a snapshot of where things stand right now on April 1st, 2025. These stories are still unfolding.
Exactly. The landscape we've been discussing, it's dynamic, it's constantly changing, and we'll definitely see things develop further in the coming days and weeks.
So for you, our listener, as you think about these economic challenges, the rise of alternative financial systems like crypto and the possibility of AI reshaping our digital world, what do you think the global financial and technological landscape might look like in the next few years? It's a question worth pondering as these trends continue to play out. Thanks for joining us on this deep dive.